proposed NCC caps and transitional rule.
Hi everybody, it's Sebastian here from Wealth Depot. Thank you for joining our first Super Strategy video. In today's session, I wish to recap some changes to the non-concessional contribution rules, which will take effect from 1 July 2017. It is highly important that you understand the proposed changes and applicable transition rules to avoid paying extra taxes and maximize the tax-free component of your super. So, what are the changes? First, as you may know, on the 15th of September, the Treasurer announced that effectively from 1 July 2017, the annual non-concessional contribution cap will drop from 180,000 to 100,000. Consequently, the 3-year bring forward cap will reduce from 540,000 to 300,000. The current 180,000 non-concessional contribution cap and the 3-year 540,000 bring forward cap will remain in force until 30th of June 2017. However, if you cannot fully utilize the 540,000 bring forward cap by 30th of June, the transitional rules will apply. This is when all the confusion and complications begin. So let's have a look at what this transitional rule means. This diagram shows the non-concessional contribution caps that apply on different scenarios. I know it looks scary at first, so let's break it down. Overall, if you cannot contribute up to 540,000 by 1 July 2017, transitional rules will apply. Your capacity to make further non-concessional contributions depends on when the 3-year bring forward was triggered, as well as the amount that you have previously contributed. So in our first case study here, Bill decides to make a 540,000 non-concessional contribution in May 2017. If Bill is able to make the contribution in its entirety before 1 July, then the contribution can be made and retained by the fund. So quite simple scenario. In Rose's case here, unfortunately, she could not make the entire 540,000 contribution before 1 July. And she has made a non-concessional contribution of 400,000 in the 16-17 financial year. While the 400,000 can be retained by the fund, as it is within the non-concessional contribution caps which applied for 16-17, she has lost the opportunity to make further non-concessional contributions in the 17-18 or 18-19 financial years. This follows as Rose's maximum bring forward amount for the period 17-18 and 18-19 is 380,000. 180,000 for the 16-17 year, 100,000 per year for 17-18 and 18-19. As she has exceeded the amount before 1 July 17, the entire amount can be retained by the fund as it is within the non-concessional cap, which applies to 16-17. So we have here in the boxes below, in the 2017 financial year, did the client make non-concessional contributions that exceeded 180,000? In this case, yes, she did. She made 400,000. In the same financial year, are the total non-concessionals greater than 540,000? No, she only contributed 400. So the remainder of the cap at 1 July 2017 is calculated at 380,000, less the total net NCCs that she did pay in advance. So we have 380,000 less 400,000 means that she can no longer make further contributions. In the next case study, Carly has been able to only make a contribution of 325,000. As this amount is less than the maximum bring forward amount for the 3-year period commencing 1 July 16, which is 380,000, similar to the previous example, she can make further non-concessional contributions in the financial years 17-18 and 18-19, totaling 55,000. So in this case scenario, her total transitional cap would be 380,000, but she has only contributed 325,000, so she can still contribute 55,000 in 17-18 or 18-19 financial years. In our last example here, Brian has been able to only make a 350,000 non-concessional contribution during the 15-16 and 16-17 financial years. As this amount is still less than the maximum bring forward amount for the 3-year period commencing 1 July 15, which in the transitional rules will be 460,000, he can make further non-concessional contributions in the financial year 17-18 totaling 110,000. So in the 15-16 year, did he exceed his 180,000 concessional cap? Yes, he did. He triggered the bring forward rules. Did he make less than 540,000 in non-concessional contributions? Yes, he did. He only contributed 350,000. So he has the opportunity to still contribute 110,000 in the 17-18 financial year. So, knowing these rules, it is now time for us to consider what strategies are available this financial year. For members under the age of 65, you should take advantage of the higher non-concessional caps and bring forward ability apply for this financial year to maximise your contributions. This will enable you to boost your superannuation balance without paying any taxes on contributions. But please note that if you exceed the contribution caps and do not select to have the excesses refunded, the excess components may be taxed at the maximum tax rate of 49%. If you turn 65 this financial year, for example, if you're born on 1 February 52, you'll be able to contribute up to 540,000 before 1 February 2017 without having to meet the work test. This is based on the condition that you have not previously triggered a bring forward that covers this financial year. For people turning 65 this year, maximising non-concessional contributions is highly important to boost the tax-free component of your super balance. We will cover this contribution strategy in another video to be released shortly. Once you turn 65, you have to satisfy the work test to make further contributions. The work test applies to people aged 65 to 74 years of age who wish to contribute to their super. To be able to make contributions, you must have worked for at least 40 hours over 30 consecutive days in the financial year that you wish to make a contribution. We hope today's video has been helpful. Please contact the office if you have any questions or concerns, or if you wish to review your superannuation strategies. See you again next time.